Minister, thank you for your time. It's a pleasure and an honor to have you. I know that our audience is keen to hear your thoughts on the government's priorities and how you've handled the coronavirus shock in New Zealand, both the containment measures and the policy measures that you've taken. New Zealand is always somewhat of a leader globally when it comes to new policies, and we're keen to hear from you whether there are any lessons for the rest of the world. So perhaps on that, Minister, we could begin with your take on how New Zealand has been so successful in containing the virus domestically, and what your plans are in New Zealand for the vaccine rollout.
Yeah, well, thanks, Stephen. Thank you for the opportunity to have a chat, and I welcome the chance to talk to you and to your Fitch clients around what we've been doing. Look, from New Zealand's perspective, there's a phrase we've used here, which sounds like a rugby phrase, but it's go hard and go early. And that was really the approach that we took from the point of view of COVID-19. One thing was that obviously, given our geographical location, we were able to draw quite a few lessons from what was already happening in the rest of the world when it came to the spread of COVID-19. But obviously, also being an island nation too, we took some pretty dramatic measures, which is the go hard bit. And so we did shut off travel into New Zealand from anyone other than New Zealand citizens and residents, and moved very quickly to do that. And that allowed us some time and some space. And then we followed that with a heavy lockdown, but we were very fortunate that it didn't need to last very long. We got on top of the outbreak that we did have, and with one or two exceptions over the last year, we've been able to live relatively freely here within New Zealand. And I think a lot of New Zealanders, when they look across the rest of the world, it's, we feel very, very sorry for people who've been in working from home for a whole year, or not able to go to school or meet their friends and families. It's something we're very grateful for here in New Zealand, that we've been able to do that. So we very much took that approach, that the best possible outcomes for New Zealand and from an economic perspective would come from a strong public health response, and we've followed that through. We've adopted what we call an elimination strategy, which essentially means that we did eliminate it through our first lockdown, and then whenever there are outbreaks, we stamp them out, sometimes with short, sharp lockdown periods, and we haven't had to do too many of those. And we've now very fortunate position of opening up our bubble with Australia, which New Zealanders are very excited about. In terms of the vaccine, New Zealand's been able to take quite a different approach to the vaccine than other countries, because we don't have COVID here to any real extent. We've been able to focus on a program that rolls out vaccination to our border workforce, who are the people who ultimately at the moment are our first line of defence. So that's the people who work at our airports and our ports, but also we have been putting everybody who comes into New Zealand into 14 days of managed isolation, which we've done through a network of hotels, essentially, that we have contracts with. And so that workforce has been vaccinated. Our health workforce is now being vaccinated. And then we move into a third phase where we do perhaps what we would have seen in other countries at the beginning, which is our more vulnerable population. So our elderly populations, people with particular health conditions. By about the end of June, we will have vaccinated about 1.5 million of our 5 million population through that process. And then from the beginning of July, we'll have population-wide vaccination program, with the goal that we'll have every New Zealander vaccinated before the end of the year, or every New Zealander who wants to be vaccinated before the end of the year. We've moved to a position where we've got enough vaccine from Pfizer to do just the Pfizer vaccine. We do have arrangements with others, but that puts us in a strong position to be able to offer people something they can be very certain and confident about. So again, it's a bit of a byproduct of having a slightly different experience of COVID and not having people who are sadly still dying from COVID. It means that we've been able to adopt that approach, and also working very closely with our Pacific neighbours as well around their need for vaccine and supporting them through that. So it's something we don't take for granted by any means. New Zealanders have worked very hard to be in a position where we've been able to live relatively normally, and so keeping New Zealanders safe from COVID is still our number one priority as a government, but the vaccine is obviously very important in that.
So you've been spectacularly successful in containing the virus domestically, as you described. That's in a sense taken the premium off of a quick vaccine rollout. I think the way you phrased it to us once earlier is it's not when you start, but when you finish. Is that still the strategy then when it comes to vaccines in New Zealand?
Yes, very much. And our Prime Minister, that's her phrase. So I did not steal it either. But it's, very much that, obviously in other countries around the world, there's been this huge imperative to get people vaccinated to try and slow down the terrible toll that it's taking. We have been able to do this, and we are ramping it up. And as I say, from the beginning of July, we'll be doing a mass vaccination program, which we've never done in New Zealand, to try and vaccinate the whole population. And so, it's very much about that. And as I say, we believe we will be finished with everybody who wants to be vaccinated before the end of the year. And that then opens up another series of options for us about how we then reach out and reconnect with the rest of the world. So, New Zealanders I think have understood that there are other countries for whom it was more important that their vaccination program started immediately, but many of those countries will spend a lot longer vaccinating their whole population than we actually will.
Okay. Now, what's been the economic strategy, which is, of course, your remit? You've announced you've not held back at all when it comes to fiscal measures. Some 20% of GDP worth in measures have been announced to be spent between the current fiscal year and out through FY24. That puts New Zealand on the larger end of the spectrum when it comes to a fiscal response. So could you just describe to us what the economic strategy around that has been?
Yeah, so obviously the first point is the one that I was just making, which was we believed that the strong public health response was the best economic response, that by moving into that very heavy period of lockdown early, taking out one of our substantial export earners in the form of international tourism, plus our international education industry as well, was actually the best thing we could do. Now, it had a very dramatic impact, but it has then enabled us to get back to some relatively normal life here in New Zealand. The two words that I used as my catch cry during that early period were cash flow and confidence. And what we wanted to do was make sure that businesses, had money. And so we adopted a wage subsidy scheme similar to the ones that other countries have adopted, but we pushed it out on a high trust model and in lump sums, so that businesses could use that to support keeping their employees on. It was very much based in a labour market attachment philosophy. So the requirement in taking the money was that you would keep your workforce on. And that proved to be successful because we had the health success. We were then people were able to not take precipitous decisions. And as a result, unemployment has peaked at this stage up around just under 5%. It may go up and down a little bit, but that's far better. I was having forecasts of double-digit unemployment, and we think getting that money out the door very quickly was important. But as you're noting, it was obviously a large sum of money in doing so. At the same time, we've invested in individual sectors such as the tourism sector to be able to ensure that we still have tourism businesses that can operate when we get more international tourists back. So we provided some additional support in those areas, support for our small businesses through the cash flow loan scheme to be able to deal with fixed costs and so on. So we've adopted the approach that it was important to do that. We've been backed by a pretty strong monetary policy response as well from our central bank that's enabled that. And obviously we came into this with a balance sheet in a very strong position, net debt down under 20% of GDP, but it meant that we were in a good position, and obviously interest rates are low, and we've been able to borrow that money in such a way that that we're confident that we can manage that from a balance sheet point of view. We've tried to continue to be careful with our spending, but we knew that we needed to build those levels of cash flow and confidence up, and I think the measures we've taken have done that.
Right. Well, thanks for that. Lots of lessons, I think, for other countries. From a ratings perspective, we certainly took note that you went into this crisis with a strong balance sheet, and you're using some of the room that you have thanks to years of very sound fiscal management. In fact, we have a positive outlook on your foreign currency rating, and we justify that because of your track record of fiscal management gives us some confidence that buffers can be rebuilt over the medium term. And I'd like to ask you about that in just a moment. But before we get there, with the background that you've just provided on the coronavirus and the fiscal and monetary stimulus, what is your outlook for the rest of the year in New Zealand? The whole world is watching eagerly how the Australia-New Zealand travel bubble that you've announced is going to proceed. Will that have a meaningful impact on sentiment in the outlook?
I certainly think it'll have a meaningful impact on sentiment. Absolutely. There's a wave of positivity here. We've got Australians arriving in New Zealand as tourists, which is terrific. Good solid bookings through the middle of the year. It's the winter here in the Southern Hemisphere, about to come into winter in the Southern Hemisphere. And so strong bookings for our ski seasons, which Australians often come here for. So that's good. It's not the overall panacea for our tourism industry. A vast majority of our tourists don't come from Australia. And so, we're going to have to continue to deal with that gap because we're not expecting a broad range of international tourists until next year. So there will still be a gap there. But it's definitely good for confidence that people can see some light at the end of the tunnel. I think a combination of the vaccine rollout and the travel bubble is really helpful for business confidence generally there. And again, hiring intentions, we're seeing really good numbers coming through from businesses. And in fact, we've got our next quarter unemployment numbers coming out shortly. I'll be very interested to see where those are. Some people have predicted a little bit of a spike, but overall, when I look at job ads and hiring intentions, it's still very, very strong. Overall, the bank economists here are looking at a flattish first quarter in New Zealand, just because in that first quarter, we did have a couple of outbreaks where we had to go into short lockdowns. And so, that will affect that. Plus, it's that quarter is always the tourist quarter in New Zealand over the Christmas and New Year period and into the early months of this year. So fairly flat, but then obviously picking up after that. But the underlying, situation is good for New Zealand. I think growth will be good. Obviously, global growth rates have been improved in terms of the IMF forecast. One note of caution there for us is that the third and fourth waves of the infection internationally, have the potential to affect confidence. And as a small, open economy, trading economy, we will be affected by that. So we've got a slightly wary eye on where that is. And as I come to produce the budget here in May, I've still got an eye on the fact that we'll still be producing a budget in the shadow of COVID, and so we'll obviously look at it in that regard. But overall, optimistic, looking towards the second half of 21 and into 2022. We had a big boost in the September quarter of 2020 here, much greater than people expected, in a slightly flatter December quarter. So there'll be a bit of that volatility, and I think that's the catchphrase for everybody at the moment, isn't it? Volatility and uncertainty are going to be with us for some time as we work our way through this, but with a general tone that we've turned a corner and that we're well on our way through COVID now.
Yeah, you're quite right. We also see quite a lot of COVID-related risks to the global outlook. That said, the U.S. economy is poised for an increasingly strong rebound this year. We've grown confident that China will continue growing strongly this year. We have 8.4% for China, well above 6% in the US. So that gives you in New Zealand some heavy tailwinds, I think, to growth. Yeah. And the commodity price outlook. You're a big dairy export, and I checked, and dairy prices have continued to rise. So how do you see the China complex? Your neighbors next door in Australia have had quite a lot of tension with China over geopolitical and trade issues. Is any of that spilling over and affecting New Zealand?
Well, we try to operate, as New Zealand has for many, many years, an independent foreign policy. You know, we will speak up on issues that concern us, but we also know that we need a range of relationships across the world. And I think one of the things that COVID-19 has taught all countries is the importance of a diversity of markets and a diversity of products in terms of exports. And we've been very fortunate through COVID-19 that our export performance has held up. Being a primary producer is a big part of that. People will continue to need food and wine, and so we're in a position to be able to be continue our exports. And that's perhaps one of the unsung things I think of the government's response here, is that we worked very hard to ensure that air freight capacity continued to come in and out of New Zealand, and that's supported our exports to stay up. Global commodity prices have been strong and continue to be strong, and so we feel very good about that and that part of our performance. Globally, we obviously can continue to keep an eye on things. The US-China relationship's a very significant factor for countries like New Zealand, that we need good stability in global trading relationships. And, we're a small country, so our ability to influence geopolitical issues is limited outside of a multilateral forum. So we push on in those fora, but we obviously recognise that those geopolitical issues remain a risk to us all. But we will continue, our trading relationships with China, with the US. We have a very strong trading relationship with Australia, so that's affected by their relationships internationally too. So from our perspective, we see our relationship with China as one of mutual respect, and one where we will continue to raise issues, as you do with friends, as we do with the US. But we're very, very conscious of the fact that our export profile needs to be diversified. We need to be adding value to products here and seeking the highest possible premiums overseas for them.
Okay, very good. Now you mentioned the budget that you're thinking about for the next fiscal year. Can you share with us any high-level elements at this stage of the budget, which will come out in May, and in doing so, what are some of the government's priorities? I should have congratulated you at the outset. In October last year, the government won a resounding victory, and you now have the first single-party majority in Parliament in decades in New Zealand. That must make it easier for you to get your policies through. So with that, how do you see the budget for the coming year?
Yeah, look, it's different, as you say. We haven't had a single party government here since the early 1990s. One of the things we take very serious though is the responsibility to ensure we have a balanced package at that budget. An awful lot of fiscal stimulus has gone on, and there's room for a little bit more, I think, in terms of just managing that COVID uncertainty. But we have to balance that with the fact that we've got responsibilities to maintain that strong fiscal management approach that put us in the good position in the first place, and for dealing with COVID. So what you can expect from the budget is a balanced approach to continue dealing with COVID and keeping New Zealanders safe from COVID, but also dealing with the impacts and effects of that on particular sectors and people. The second priority is around accelerating our economic recovery and rebuild. We've got a very significant infrastructure expenditure program, quite a lot of important work in our transport sector and core social services. So you expect to see a focus on that. And then three very long-term issues that we know we've got to continually work on. One of those is dealing with housing as an issue. That has been a significant long-term issue in New Zealand around housing supply, but also housing affordability. We're very committed to moving to a lower carbon economy, and that requires significant investment and work as well. And a major priority for this government is our child wellbeing strategy. Our Prime Minister has set a goal for New Zealand to be the best place in the world to be a child, and so there's work to be done there. So that's sort of three examples of long-term issues that you can expect to see work on in the budget as well. And obviously in 2019 we piloted our wellbeing budget, which we use real-time data and information to support an evidence-based approach to what will make the biggest difference to wellbeing across financial wellbeing, personal well-being, the natural environment, and our strength of our social capital in our communities. So we'll continue to use the framework we have for that as well. So it'll be a budget that'll be a bit different from last year's budget. Last year's budget included the creation of a $50 billion fund, which we certainly won't be seeing that again. But we do continue to need to invest in social and public services and get the balance right of returning ourselves to a sustainable fiscal path while not trying to do that at such a pace that we would damage some of the social advances that we've had. So getting that balance right is important. We've got a very strong public finance framework in New Zealand that obliges us to be fiscally sustainable. And we've taken the decision that, through to the middle part of this decade, we recognise that the borrowing we've needed to do will have an impact on those fiscal indicators, but then we will then return to a fiscal position that's more sustainable than where we are now.
Okay, I think you've already answered the question I was going to ask you about those medium-term public finances and the rebuilding of buffers. So from what I'm hearing, the budget in the coming year will continue to provide economic support, but at the same time begin the gradual process of consolidation and rebuilding of buffers. Have I got that right?
Yeah, you do. And the thing for us is that the numbers that we've been seeing coming through, and obviously the final budget numbers will be in May, but the numbers we've seen, we have regular monthly, releases of our accounts here in New Zealand, and the numbers we've been seeing coming through are far, far better. We're continuing to see a higher tax take than we expected. Our government spending's a little lower because we haven't had to use all of the funds we set aside. So yes, that's exactly the position we're in. There is still a period of time where that spending is needed, but we begin the track back to building that fiscal buffer back up, and you'll be able to see that track in the budget.
Okay. Now, before we let you go, you mentioned housing prices. They've been on fire in New Zealand. Depending what measure you look at over the past year, they're up 16 or even more than 20%, depending what measure you look at, which is, I'm sure, created a lot of headaches for you because of the population worried about housing affordability. And I should say that this housing issue is not unique any longer to New Zealand. We're seeing significant upward house price pressures developing in many advanced economies, not only across Asia Pacific, but across the West as well. Why are housing prices accelerating so rapidly? And you really made the news in February calling on the Reserve Bank of New Zealand to add to its remit housing prices. So that's official, that's done, that's a first as far as we know when it comes to central banks having that as an explicit remit in its mandate. So what are your thoughts on this?
Yeah, and look, I think, Stephen, it was actually when we talked, and you highlighted to me some of the other countries where we are seeing spikes in house prices. That's, of course, the opposite of what we were all told by economists about this time last year, which was that house prices would fall somewhat dramatically, in fact, in the wake of COVID. And the exact opposite has occurred in New Zealand. I think there's a number of factors at play here, and the reason why New Zealand perhaps is seeing this to a greater extent. Obviously, low interest rates remain, are a thing everywhere in the world, and that's clearly supported people. Some of it's the fact that people have felt confident about the economy here, and therefore have looked to housing as an area where they can put some of their money in place. The other issue for New Zealand is a long-term lack of supply, and I think that's really what's exacerbated the situation here, is we do have that shortage of supply. And so our response has been one to look at both supply and demand. So in late March, we announced a package of initiatives, which includes a very significant housing infrastructure fund to support the creation of build-ready land. We've got some issues with that here in New Zealand at a local authority level, so we're going to get alongside those local authorities and make sure the roads and the drains and the things that are needed for housing development are there. Programs to continue to support first home buyers in New Zealand into the market through a variety of government-backed schemes. But on the demand side, yes, we have taken some measures there to ensure that actually, we have some controls. And the work we did with the Reserve Bank, I think it's probably important to clarify one element of that, which is the twin objectives of our Reserve Bank have not changed, and that is price stability through inflation targeting and what we call maximum sustainable employment. So having a goal of working towards that. Where housing comes in is in fulfilling those goals. We have asked the Reserve Bank to take into account the sustainability of house prices. And yes, that's a new move for us, but it's a second tier below those overall objectives. And we think that's important. There's no doubt that moves within both their monetary policy work, but also their financial stability work has an impact on that. So the Reserve Bank had its first look at that in its monetary policy statement recently, and it will continue to do so. We'll continue to look at demand measures where we can to make sure that, particularly for investor demand, that's kept manageable so that people can have a chance of buying their first home. But ultimately, we have to build more houses and more affordable houses more quickly, and that's a major part of our program over the coming years.
Okay, so I suppose the Reserve Bank will be making full use of its macro-prudential tools to manage the financial stability end. And I think some people in the market had interpreted initially that this might lead to an earlier tightening by the Reserve Bank, but their most recent statement by the Reserve Bank suggested they're very much on hold given some of the uncertainties to the economic outlook that you referred to earlier. So we heard that message. Minister, on behalf of Fitch Ratings, again, let me thank you for your time today. That was a very helpful and as always, clear description of the government's priorities. And we wish you all the success in the next year's budget and the year ahead. Thank you again.
Thanks very much, Stephen.
Thank you.